The profit and loss, also known as the income statement, shows a subset of your accounting data, specifically your revenue and expenses. To see how this works in practice, we will go to gravybooks.com, where it will log us in automatically, and I'll create an entity. And right now my profit and loss is empty because I don't have any transactions. So let's go create some transactions. First thing we'll do, just to show that it doesn't include everything, is we'll just create our owner's equity account. Let's say we are initializing our company with $1,000. And we create that entry and go to the profit and loss, and it's still empty. So it only applies to revenue accounts and expense accounts. So let's say we buy some goods, so that would go to our cost of goods sold, and we want to, in this case, let's say we spend $50 on some items that we're going to sell, and then we sell those items for more than what we purchased them for into a sales account. And let's say we are selling it for $100 into our bank account. And then also we will show a different type of expense or money going out. The terminology is a little bit annoying because accountants reuse the word expense to mean multiple things, but a cost of goods sold is commonly called an expense, but it's a different class of expense than expense, which is an insanely confusing statement, but is what it is. And let's say we pay some amount for office rent, which is an expense. So we just have some basic transactions here. We bought items for $50, sold them for $100, and paid another $20 for office expenses. So now if we go to our profit and loss, it will break this down into these separate sections. So revenue is pretty straightforward. This is our income, our total revenue that came into our income accounts. And cost of goods sold is a specific type of expense that is broken out separately than expenses. And this cost of goods sold, the way to think of this is, if you made this if this purchase scales with your revenue, then it's probably cost of goods sold. So that's kind of the test you want to think about. Something like office rent, you might double your business and keep paying the same rent at your office. So therefore it kind of belongs in the expenses category, where it doesn't necessarily scale with your revenue. So generally cost of goods sold scales with your revenue. And that number of your revenue minus your cost of goods sold is your gross profit. So this is, reflective of, if you scaled the business, you would expect to continue seeing these numbers. So that's why investors would commonly want to see your gross profit. Your expenses go into their separate line. So these are payments that do not scale with your revenue, or scale slower than your revenue, and they get their own section here, and that feeds into your net income at the very bottom of your P&L, which in this case is 30. So that's a quick explanation of your profit and loss, also known as your income statement.